Good afternoon and welcome to the Sound Energy PLC Annual General Meeting. Throughout this recorded meeting, attendees will be in listen-only mode. Questions can be submitted at any time by the Q&A tab situated on the right-hand corner of your screen. Just simply type in your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted and publish responses where it's appropriate to do so. I'd now like to hand you over to Graham Lyon, Executive Chairman. Good afternoon, sir.
Thanks, Paul. Well, good afternoon, ladies and gentlemen. Welcome to our Sound Energy Annual General Meeting. Just to clarify for those online, you won't be able to ask questions during the Annual General Meeting, but for the presentation afterwards, questions are most welcome. Before commencing the proceedings, I'd like to introduce myself and my colleagues. I'm Graham Lyon, the Executive Chairman of the company. To my right, I've got David Bluden and Christian Bukovic, our non-executive directors. And to my left, Pooja Panchmatia, our company secretary from Amber COSEX. So before we start the formal proceedings, may I pass over to our company secretary to explain the process, the procedures, and how we will follow this annual general meeting.
Good afternoon. Before Graham takes you through the formal business, I would like to advise that the company is exercising its authority contained in the company's Articles of Association to call for a poll to be taken on the resolutions to be put to the meeting. I will now detail the poll procedure we will follow for this annual general meeting. After the resolutions have been proposed, there will be an opportunity for you to ask questions about the resolutions. If you have a question, please state your name, or if you are a proxy or a corporate representative, your name and the name of the shareholder that you represent before asking your question. Once any questions about the resolutions have finished, you'll be invited to vote by way of poll on the resolutions put to the meeting. On a poll, each shareholder present in person or by corporate representative or proxy has one vote for every share held. If you have already lodged a form of proxy, you do not need to vote again, unless you wish to change the way you originally voted, or unless you did not appoint the chairman as your proxy and the person you appointed as your proxy is not present. A separate poll card should be used for each separate holding. So if you are representing more than one holding, please ask for additional cards as necessary. You should indicate the number of shares to be voted in the appropriate box on your poll card. If you do not, all the shares registered in your name or in the name of the person you are representing will be included in the count. If two or more persons are jointly registered as shareholders, any one of them may vote either in person or by proxy. If more than one of the joint holders votes, then only the vote of the joint holder whose name is most senior in the order of names on the share register shall be counted. Please complete the poll card and sign where indicated. If you are here as proxy or corporate representative for a shareholder, you should complete the details of the shareholder you represent and your full name. Poll cards are provided as you entered the room. Please remain in your seats while the polls are being conducted. Once voting is finished, completed poll cards will be handed to the representation from MUFG, who will act as scrutineer. These votes validly cast at this meeting will be added to the proxy votes properly received in advance of the meeting, and the outcome of the poll will be announced via RNS. The quorum for the meeting is 2 members present in person or by proxy and entitled to vote. As this meeting is quorum, I will pass back to Graham, who will lead the meeting through the formal business.
Thank you, Pooja. So we'll start the formal business of the meeting. This notice convening the meeting was sent to shareholders on the 15th of May 2025, and I would propose, with your agreement, to take the notice of the meeting as read, and then I'll read out the short form of the resolutions. Okay, thank you. I will now propose the resolutions to the meeting. The first item on the agenda is Resolution 1, to receive the audited annual accounts for the financial year ended 31st December 2024, together with the director's report and the auditor's report on those annual accounts. Resolution 2 is to appoint Crowe UK LLP as auditor of the company. Resolution 3 is to authorise the directors to determine the remuneration of that auditor. Resolution 4 is to reappoint myself, Graham Lyon, as director of the company in accordance with Article 124 and 125 of the company's Articles of Association. Resolution 5 is to authorise the directors of the company to allot shares in the company up to an aggregate nominal amount of 6,241,868 pounds and 37 pence, provided that it is only used to allot shares for cash on the basis that it's pro rata with shareholders' existing holdings, as outlined in the notes of this notice, with a separate authority to allocate shares up to an aggregate nominal amount of £12,483,736.74 in respect of shares being issued by way of a rights issue. If given, this authority will expire at the conclusion of the annual general meeting to be held in 2026 or the 30th of June 2026, whichever is the earlier. Resolution number 6 is linked. Resolution 6 is linked with Resolution 5 in that it concerns authority to allot shares of the company. Where it differs from Resolution 5 is that it is in particular concerned with a situation where your directors propose to allot these shares for cash on a non-preemptive basis. Your directors are seeking authority to disapply preemption rights in respect to an aggregate nominal amount of £4,161,245.35. If given, this authority will expire at the conclusion of the annual general meeting to be held in 2026 or on the 30th of June 2026, whichever is the earlier. And Resolution 6, this one is a special resolution. Resolution 7 gives authority to the directors to make market purchases of ordinary shares in the capital of the company of up to 10% of the company's issued share capital as at the date of mailing the notice of this meeting. If given, this authority will expire at the conclusion of the annual general meeting to be held in 2026 or the 30th of June 2026, whichever is the earlier. Resolution 7 is also a special resolution. Now, before putting the resolutions to the meeting, are there any particular questions? There being no questions, I appoint MUFG, the company's registrar, as scrutineer to the meeting, and I will now put the resolutions to the vote. Please complete your poll card and the company secretary will come and collect them from you. Okay. I'm not sure how many there are, but okay. Okay, they've all been collected. So as there are no more poll cards to collect, I declare the poll closed. Ladies and gentlemen, that concludes the formal business of today's annual general meeting. The outcome of the poll will be announced via RNS. Thank you for your attendance, and I now declare the meeting closed. What we'll do now is we will, for those online, and Paul, if I can pass over to you, we'll start the investor presentation.
Fantastic. Thank you very much indeed. Let me just hand over. Obviously concludes the formalities of the AGM. We'll now run through the investor presentation, followed by Q&A. Graham, if I can just hand back to you and the team just to turn through the slides, and then I'll pick up from you at the end and we'll move into some Q&A. So thank you.
Thank you, Paul. So thank you very much, everybody, for those who voted online via their proxies. We appreciate that. We'll get the RNS out very shortly. So what we'd like to do today is, for those that are new to the company, those who are long in the company, we'll try and cover everything. And we've got the whole team here to answer questions. Perhaps we could swap over, if like David and John, maybe Roy and Andy, if you can join me at the table. Is that okay? Just Christian stays on this. Yeah. Because there were some questions that came in regarding remuneration and the nominations committee, Christian, as the chairman of that committee, will take over the question. So the presentation, I think we all know where sound is, and today we had a couple of RNSs out to show you we've been progressing from the purely hydrocarbon business in Morocco. Our competitive advantage of being a Moroccan player, I think, is well known. We have the largest onshore resource in Morocco, gas resource, and it's currently under development through the concession. Morocco needs the energy, and for those of you who are able to read the RNS this morning where we talked a little bit about the solar project, you can see that Morocco is very, very keen to expand its renewable energy, but also to just fuel its growth. The growth in Morocco is quite substantial. I think we'd be very happy to have the same in the UK. But of course, it's all fueled by energy. And so any energy that we can deliver into Morocco is well received. At Tendrara and the concession, we have two projects. The first phase of the concession development is our micro LNG project, and we'll talk a little bit about the progress on that. And we are making progress, and we will be delivering gas in Q4 this year. So I'm sorry we can't give you an hour-by-hour update on that, but you'll see some information, and hopefully that will give you some level of confidence that we will achieve our production finally Q4 this year. The second phase of the development is the pipeline project, and we will be very keen to take FID on that as soon as we can. And with Mana Energy fully on the seat now, we expect that to be delivered an FID towards the end of this year as well. The financial roadmap of the company is important. We have an interim CFO here, Andy Mataru, who's joined us. He's up to speed, he's on top of that, and we'll talk a little bit about the financing of the company, which I know has concerned one or two of you. We have plenty of opportunities for portfolio development, and today announces the first steps in what we're doing in our fueling our transition energy promise in Morocco. So both hydrogen, natural hydrogen, and solar. And then finally, I think it's the way we do our business. Core to it is doing the right thing at the right time and the right way. For those of you, we are a public company. We are acting with true corporate governance. You've met our board, and we work with ESG at the heart of our business. We've talked a little bit about this. The share price performance over the last 5 years not been particularly great, as we've been transitioning the company from a pure exploration company into a revenue generating full cycle company with production development and exploration. So I don't need to dwell on that, except that we're all cognizant of the fact that our share price is significantly lower than where we think it should be. We're not unlike other AIM-listed companies, but I think as we edge forward to production, we believe we see a re-rating in the stock. Tendrara. What I want to make sure everybody fully understands is what we have committed with the phase 1 development is essentially less than our 1p reserve. All right? Adding the pipeline project takes us to a reserve volume that we have a 10-year take-or-pay contract below our 1c. So there's plenty of room for growth in production, growth in reserve monetization. And our 2c resource of about 377 BCF, we've contracted to sell less than or around about half of that. So we have plenty of room to grow on that. And with the global political situation, I can't see the demand for gas being any lower than it currently is in Morocco. And I certainly can't see the price of gas being any lower than it currently is in Morocco. The key for us is the first phase. We have Mana Energy now as the operator. And they are, as I say, on the seat. We are supporting them where we can, and we've offered multiple areas of support, and we are helping them in areas. We have Africa Gas being ready to lift gas in Q4 with their transportation system and their loading system. So between Mana Energy, who've moved this project along quite nicely in the last few months, and Africa Gas, we're trying to do everything we can to ensure gas in Q4. Some of the pictures of where we are at the moment, the various bits of kit, pretty much all on site. The bottom right-hand corner is the actual guts of the LNG. That's the heart of it. That's the fabrication plant of the micro LNG. So raw gas comes in, or cleaned raw gas comes in one side, and liquid minus 162 comes out the other side. Above it is the amine units. You've got the plot plan, you've got the layout, and you've got a picture of me wearing some sunglasses if you look carefully. This also gives you a feel for the size of the plant. The LNG tank, you can see that is painted nicely. It's pretty much ready. On the right-hand side, you see the flaring of gas TE6. That well has been opened up to available for production, as it has TE7. So we have now burst the discs. Those wells are flowing dry gas, no water, no liquids, no solids, very nice cleaning. So we have gas to surface, and once the processing plant is ready to accept gas, these wells are going to be flowing into them. What we want to do is switch to a little video now. So John and Paul, if you can show the video. Thanks for that. We'll move back to the slides now. And so I think what we wanted to do by showing that video was to confirm that we have two wells. Both of them have flown gas. They're both open. They're ready for, I mean, they're obviously secured and safe, but they're both available to deliver 10 million cubic foot a day of sales gas once this plant is fully commissioned. Part of the business we have sold to manage them includes our exploration. I know there's lots of questions about exploration, but nobody better to answer them than John here.
Okay, thanks, Graham. So I'll give a sort of quick summary, just to turn to the opportunity we have here to unlock what I've always believed and obviously still believe is it's a really significant gas resource that we've got available in Morocco. So we have an exposure, those that are new to the company, to a huge area of high potential exploration acreage. It's held under the premise that historically this is very much an underexplored play beneath the salt, and these petroleum systems are prolific right the way across North Africa. So in eastern Morocco, there you can see on the very small map, I know there's quite a lot of information on there, but we have the Grand Tendrar and Anouar exploration permits, a combined area of some 24,000 square kilometres, so enormous area, completely surrounded, you can see in the middle of the T5 horse development, the gas development with putting in place phase 2 being the pipeline, with enough mileage put in that pipeline to allow us to tie back any future discovery. So a really key anchor development project to open up the basin should more reserves be found. So the good news is, obviously, as everyone's aware, and those new to the company, the operator is now Managem, and they're carrying us for the cost of 2 exploration wells. We've actually technically matured 3 prospects, which are highlighted up on that map. The SPK1 structure, that flowed, it's an old well drilled in 2000. It actually flowed gas to surface without stimulation, about 4.41 million scots a day. That target there, we estimate, has a proven P mean volume of around about 140 BCF, upside of 200 BCF, within tieback distance to the development. Immediately to the south of the T5 Horst is the T4 Horst, and hopefully you can see on that map there as well. That was drilled back in 2006. Fortunately, that well was drilled quite a way down dip on the structure. The reservoir, unfortunately, there was tight. The idea being that we drill up dip on that structure in the hope we find better quality reservoir there. Again, you've got P-mean volumes there of 270 BCF in place and an upside of 400 BCF. So again, very nice, upside volume to the development. It's just 5 kilometres to the south that could be quickly tied back in. Now, for me, the real sort of exciting wildcat exploration well is the M5 structure, which is up on Anawal in there. It's an opportunity to drill this reservoir in a different part of the basin. It's a very large structure. I think it's one of the largest undrilled structures left in the basin there. But what I really like about it is we can see on the sides we've got about 400 metres of taggy reservoir there, as opposed to 100 metres on the horse, so 4 times the reservoir potential thickness there. So it has a P-mean gas in place about a TCF, upside 1.7, possibly 2 TCF in there. So a real game changer for the basin if successful. Now I know what everyone wants to hear is obviously about the drilling and the timing of those wells, and we're obviously very keen to progress that as well as much as our shareholders are. So post the divestment to the new operator Managem, there are a number of approvals and we need to close some discussions Managem do with ONHYM and the Ministries of Energy and Finance, don't they, Graham, in order to perfect these licenses. And until those approvals in place, we can't drill those wells. So we need to have those approvals in place to progress drilling. The team, we're heading across to Morocco next week for both technical management meetings to progress that work, as we hope to have news on our return. Okay.
Thanks, John. We've got a couple of questions about that later on, and we'll go into some more detail as we can. I think one area we've touched on before, but these are the 5 areas that our board has set the company to deliver on this year. And clearly the most important for us is to get production from the micro LNG plant. So that's very important, and I'll reiterate, we're confident that Q4 is going to be achievable. The second part is to progress the second phase development of the concession. So that's the undertaking of the FEED study and the EPC for the construction of the pipeline and the processing plant, to close the Ati-Juwafa bank debt, to close the gas sales agreement with ONE, all of which are in place, and but require the FEED and the EPC contract. And then essentially it all comes together with a final investment decision. John's mentioned the exploration, and at the bottom part of that you can see that there's also some work on Sidi Mokhtar that we can undertake once we've perfected the license on that, and we've announced the first move into the hydrogen and helium, natural hydrogen and helium development that we're thinking of. Andy Mataru is here with us, helping us on balance sheet strengthening and looking at optimization of our debt position. Growth is another area for the company, and we've been looking at opportunities in transition energy. So again, this morning, with our partnership with Gaia, that's coming through, and we'll also be opportunistic if it's appropriate, and we'll look at other opportunities in Morocco should they become apparent. So 5 key areas for us to focus our attention on this year. But let me pass over back to John. He spent 6 months working with GTEC developing this, so best you discuss it.
Yep. So as I'm sure people are aware, at the end of October, we announced an exploration collaboration agreement with GTEC. It was to undertake a regional screening study for the whole of Morocco. It's not just our licenses, it's the whole of Morocco, exploring for natural hydrogen and helium. We said we'd deliver the results of that by the second quarter of this year. I'm pleased, obviously, that the study has now been completed, and I'm even more pleased to say it has identified a number of areas which certainly have potential to require more detailed evaluation. So we're taking slower steps in this space, but a phased approach, which I think is appropriate given the sort of understanding of the science and where hydrogen is going. particularly natural hydrogen. But I'm sure our investor community is very aware, of the the capital and the interest in natural hydrogen across the energy sector. So GTEC's methodology you saw in the RNS, they use their own proprietary geologically genetic workflow. And what I mean by that is that it's a structured, science-based approach, and it's really tracing, how and where the hydrogen and helium are naturally generated, how they move through the Earth's crust, and where they may eventually, end up and get trapped in the subsurface, and making them accessible for exploration. So it's a science-based approach. I call it sort of a bottoms-up approach rather than sort of top-down. You may see, other competitors and other methodologies using satellites, soil salvage, seed detection. This is, starting from the bottom and tracing where that hydrogen could be. So as I say, the initial study there is identify some areas what both of us really believe, GTEC and ourselves, have significant potential. Morocco has all of the key elements for these systems to exist, and certainly sufficient to warrant further study. So we're going to enter, intend to enter a joint venture with GTEC that will deepen our relationship, and then we'll negotiate jointly exclusive rights for exploration of hydrogen and helium in Morocco together. So clearly, we see this as a strong validation of our approach. It's very much a meaningful step forward in our strategy, to establish, Sound Energy and GTEC as in a leading position in what is an emerging sector, which is attracting, as I'm sure Andy will mention to you, quite a lot of capital interest. Okay.
Thanks, John. In parallel to that, and Roy Kelly, our technical director here, has been very focused on, again, following the same model as with GTEC, picking a co-venturer and moving into, as an early mover, into the liberalisation of the medium voltage power market in Morocco. So it's not rooftop solar, and it's not the gigantic gigawatts of power for desalination or dreams of cables into the UK. This is medium voltage, around about 270 megawatts of power in over a 4-year period, to utilities, to things like schools, hotels, big businesses. Currently, they take their energy from the grid when they can get it, but also farms, etc., who will need to look at their greening credentials. So in partnership with Gaia Energy, who are a Moroccan-centered company, but have developed about 3 gigawatts of power all over Africa, wind and solar, and are actually an operator of renewable energy in Morocco as well. So we formed a relationship with those guys. They are very advanced on selecting various sites, even leasing the sites, and we'll be now applying for capacity to enter into the grids. And there's a whole lot of material that needs to come back on that. So we have structured an exclusivity with Gaia, which was hotly contested, and we will form a joint venture company with Gaia to optimize our position in the renewable energy in Morocco and the liberalisation of the medium voltage grid. Cash flow generating quite quickly. One of these projects, when they come on from start to finish, can be within 12 months. So the opportunity to generate cash quite promptly. Clearly, this is part of Morocco, Team Morocco with Sound's relationships in Morocco, that we've been able to develop this relatively unique opportunity. I'll let Andy introduce himself a little bit later on, but I think not a lot has changed in our financial overview compared to the last time we spoke. We still have the Eurobond debt, 25.3 million euros, which is due in December 27, and that hasn't gone away. And currently we're satisfying the payments, but we have some rolled up interest that we have to look at the end of 2027 as well. We also have our $18 million debt with Africa Gas, which is not due, the principal is not due till 2028, and paid over a 6-year period. Not a lot of changes in our key shareholders. Ogif and Africa Gas are still the two main shareholders. They support us, and as you've probably seen in the share price, and the liquidity is pretty low, so it's not a lot of turnover in stock. Everybody's waiting for production, I think, or an exploration event. And hopefully what we've been doing in our move to diversify our portfolio, as we said we would, and we have done that now, into the renewable energy and into less carbon intensive fuels. So we're working on that. We're watching our pennies as usual, and we have, as you couldn't expect, several questions on financing. And Paul, this is a picture of me when I was standing up on the deck. Apologies for those of you who've made it here today. We can't use, even though it's a beautiful sunny day, we can't use the deck today. That's been pre-booked by somebody else. But Paul, can I pass back to you, please?
Fantastic. Look, thank you, Graham. Thank you and the team for your presentation and update. Ladies and gentlemen, do please continue to submit your questions just using the Q&A tab situated in the top right corner of your screen. Just while Graham and the team take a few moments to review those questions submitted today, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Graham, as you can see, we've had a number of questions, both pre-submitted and throughout today's meeting. If I may just hand back to you, where appropriate to do so, if you give responses directed to a member of the team, and I'll pick up from you at the end.
Thanks, then, Paul. So yeah, look, I'll do it the normal way. I'll read the question out. I'll either try and answer it myself, or I'll pass it to one of my colleagues to capture. And the first one is a difficult question that's come in, but we're going to try not to shirk these things. And of course, it's about me. So I've asked my senior independent director, Christian Bukovic, and also the chair of the REMCOM to answer it. So let me read the question. In 2024, salary costs nearly doubled, and the CEO was paid an eye-wateringly large amount. Can the company explain the specific metrics and KPIs that were met and the logic behind the level of remuneration, given the shareholder value destruction the team have presided over during the last 5 years? It seems like there's no link between exec pay and value generation for the owners and the funders of this company. How can the CEO honestly justify that?
Thank you, Graham. Graham joined Sound in February 2020, when the company had basically used up all its funds on drilling of high risk and potentially high reward exploration wells. There was no money left for the development of the one significant asset, the gas discovery, Tendara Horst T5. And a month later, Corona pandemic struck the world, energy prices tumbled. The company was essentially doomed. Over the last 5 years, in a very hard struggle, Graham, together with leading his management team and with the board that he renewed, has completely turned around the situation, as you have heard in many previous presentations and today. Now, for those who joined more recently, some of the milestones worth mentioning were the gas sales contracts agreed, the vendor funding secured for building the micro LNG plant, many other steps. But the crucial achievement was the final completion of a farm-out agreement, as communicated last December, that secured funding for all the elements of the development that are not covered by the vendor funding of the plant, and crucially also the drilling of 2 exploration wells, many other aspects to it. A very important aspect of the whole deal is also that it put Sound in a very favorable position within the country Morocco. So this is an absolute crucial and very, very decisive breakthrough. But perhaps many of you cannot fully appreciate how difficult it is to achieve funding for upstream oil and gas projects in Morocco. Morocco has seen E&P activities for more than 100 years. I believe almost all major companies and many small oil and gas companies have been active in Morocco, shot seismic drilled wells and failed. Some of the companies have gone in, out, back in again and left. There has, for all these long period of activities, there has not been one significant field discovered and developed other than Tendrara. So in order to achieve the farm out, initially Sound had to approach more than 100 companies and institutions. That took almost 3 years, tense contacts. Many of these institutions and companies were very interested and looked at data and a very well organized data room, negotiated. With some of these companies, negotiations were long, protracted and hard, and Graham led that effort from the front. He traveled almost on a weekly basis to Morocco, to Egypt, other places, to secure a deal. Many small cap oil and gas companies in the same challenging period, because the last few years were challenging for small cap oil and gas companies in general. Many of these companies have delisted from AIM or the standard list, and quite a few of them have actually gone out of business completely. With the relentless effort of the team, we are in a very different position, and we actually now finally in a position where we can consider meaningful growth beyond Tendrara. But all this time, Graham has worked for very low remuneration compared to his peer group. We have, as a REMCOM, commissioned several independent studies done by specialist consultancies. His pay level, both just looking at the base pay and looking at the total package, is in the order of 60% of the median of the peer group of companies. And that's not 1 year, that is the period 2020 to 2024. And in that period, he didn't have any significant cash bonus, and he is also not throwing a pension fund contribution or health insurance or other benefits. So keeping all that in mind, and of course, David, my colleague on the remuneration committee, and I have been very closely working with Graham and with his executive team over the years. We're probably much more connected than many NEDs are with their respective boards and management teams in other companies. So we were in a very good position to judge just what outstanding exemplary efforts were made by Graham in particular. We have carefully considered that and concluded that a quite substantial bonus award, primarily for the achievement of the management deal, but also for the whole constrained effort of the last 5 years, was in order and appropriate. And I hope, considering all these factors, you will agree with me.
Okay, thank you, Christian. We can talk about it if you want to come and have a chat with me afterwards, then please do. Next question was, we've got Dan Slater at the back here, our Zeus research head, and why is the company and its broker Zeus still providing phase 2 timeline guidance when it's been so poor historically at understanding the time it takes to progress that project, and even more so now as it's entirely in the control of third-party management? Well, first of all, I don't think it's Zeus you should be going on about. You know, it's Sound Energy and what it advises Zeus. But I would say Zeus was presently, Dan and I were at site back in January, and Dan had the opportunity to talk with Managem firsthand, and also the construction guys, the facilities guys at Ital Fluids, the partners. So you know, it's the assumptions that we have to take. And it's true, sometimes things take longer. These things don't always work the way we expect. And what we've got to do is give you the most realistic estimate of when these will be delivered. But I think the thing you should take into thinking or cognizance is Mana Energy is a public company in Morocco, but it has a large shareholder, and they bought into this project to deliver gas from Morocco. Yes, of course, they're in it to make money, but they're in it also to do what Morocco needs, which is deliver gas. And so there's no way Mana Energy is going to be sitting there wasting its time, not looking at getting a phase 2 going. We have the ONE gas sales contract in place. We have Atijafa bank debt in place. We need to refresh the FEED study. Now, yes, of course, Mana Energy is a mining company by background, are not quite as up to speed on how oil and gas projects go. But I tell you, they're learning fast and they're picking up. And of course, we're here to help them. So we meet them in Rabat next week. There's a management committee meeting, and this is on the agenda. And Mana Energy will be presenting their current plans. So when we're able to disclose further information, we'll let you know. Next question was, as part of the sale of the large percent of our assets to Managem, we legally passed a large percentage of our ownership of Tendrara to them, and they've got operatorship, by the way. In return, what cast iron legal certainty do we have that Managem will actually drill the 2 exploration wells, M5 and SBK? Carrying sound on those wells formed a material part of the consideration of our asset. We passed to them, but what legal certainty do we have that they'll drill the wells and in a certain time frame? Is this another case of Sound shareholders getting screwed over in a little mentioned detail of another corporate deal? Or no, the exploration wells are defined very specifically in the sale and purchase agreement, and there are deadlines by which those have to be drilled. And if they're not drilled in good time, the SPA, that's the sale and purchase agreement, requires Managem to pay the equivalent amount of money in cash. The wells can't be drilled until, as John alluded to earlier, the licenses are perfected, and so we're pushing the Mana Energy to engage further with the ministries and with ONIM to get that activity finalised for the legalities of the licenses, so that the exploration drilling can move ahead and the planning for that can move ahead. Here's the next question. Am I taking it or are you taking it on the Eurobond?
I'll take it, John.
Okay. Let me read it. And Andy Mataru is our interim CFO, has come in. Phase 2 revenue will not materialise for some time, and Sound Energy has to meet its Eurobond debt in 2027. Is the debt collateralised against Sound's interest in Tendrara? If so, what are the near-term plans for renegotiating the debt? The threat of foreclosure is an obvious huge drag on the share price. Let's sort this one out once and for all. So is the uncertainty of raising finance for Citi, given the large dilution that resulted from the so is the uncertainty of raising finance for Citi. Given the large dilution that resulted from the 2023 loan note for a very modest cash raise.
Okay, well, firstly, the Eurobond loan notes are not securitized or got a share charge across the Tendrara asset. They're actually got a share charge across Morocco Energy South Limited. We're very aware of the issue with the Eurobond maturity date of December 2027, and there are a number of conversations that are ongoing at the moment with ways to restructure the bonds, which would hopefully tie in with the timing of the phase 2 revenues, when that bond could then be more easily serviced. My knowledge of the bond since it was put in place is that it's already been renegotiated and restructured on 2 separate occasions. So I think that once we get into some revenue from phase 1, that will also help us put us in a better position with conversations with the bondholders to restructure the bond. But this is something that's really at the top of my list and really focusing on at the moment.
Thanks, Andy. The share price remains at the lowest as there's been absolutely no news and there's lack of confidence in any of Managem's funded promises are going to happen soon. Yeah, you can say that to us. I'll try saying that to management. Sound has no revenues, is running out of cash. Is there a stipulation in the management agreement regarding the scheduling of phase 2 or the funded exploration drilling? When can we expect any news from management? Well, it's a sort of repeat of the same question that I answered a minute or two. The SPA does specify the 2 exploration wells, does have timelines, and it does have a monetary equivalent if those wells are not drilled within those timelines. Regarding phase 2, again, no, in the SPA there's a commitment for funding of the phase 2 development, and but there is no timeline other than everybody wants to get on with it sooner than, and management didn't buy into that project to sit on it and do nothing. So no, it's very much on their agenda, and as John alluded to, we have a management committee meeting with them on Monday week. Update on phase 1 progress would be appreciated. How near to completion is the cryo plant and first LNG? How long will testing and commissioning take? How many months, years will it be before full capacity and full phase 1 revenues? Well, I mentioned some of the progress in the slideshow earlier on. You can see pretty much all the kits at site. It's all being painted, made ready, and then it will be commissioned. I believe commissioning's due in about August. And you've seen the wells are able to flow gas. Bolting it all together essentially is what's going on at the moment. Full capacity, those 2 wells can whack out full capacity on day 1. But you also saw the LNG tank. It's painted, it's structured, it's there. That size is about 6,200 cubic meters of liquefied natural gas, which is around about 10 to 12 days of production. So what I understand from Africa Gas is that they will bring on a new client every couple of weeks. So we will not necessarily be selling the full volumes of gas on the first day. We can produce the full volume of gas on the first day, and the kit, the LNG manufacturing plant, the LNG core cold box, that works at a certain rate. So it's not sort of like scaling it up and only having a bit at a time. You can knock it in straight away quite quickly. So fully commissioned, I would say we'll be on plateau within a month. So Andy, again, what progress has been made regarding repayment or renegotiation of the bond, and realistically the expectation that any phase 2 revenues will be ready for repayment by that time?
Okay, so the bond needs to be repaid at the end of December 2027. We may be in production by then on phase 2, depending on the timing of the FID when that's taken on phase 2. But regardless of that, we're in conversations with the bondholders and representatives of the bondholders to restructure the bond so that it is comfortably within the revenue phase of phase 2.
Thanks, Andy. This is a question again from Christian, more about remuneration again. Graham made the comment that Sound is not a one-man show. You can clearly see it's not, and that he's backed by a strong supporting team, so you clearly can see that's true. After Graham's very generous bonus, are any other members of that supporting team going to be granted bonuses? If so, would this be in the form of shares or cash? Shareholder confidence is not helped by such a low board of director shareholding. Maybe I'll just answer that one first. I bought a few shares over the last month or so, but it's very rarely we're in an open period, and today's RNSs, I believe, puts us back into an open period. But Christian, can I ask you about the
don't be afraid, this will be a shorter answer. Yes, the remuneration committee and the board have, of course, carefully considered and evaluated the contribution made by all team members, and we have decided on awarding individual cash bonuses as appropriate.
Thanks, Christian. So yeah, everybody got something. The next questions come in today. And that's interesting. Could the company explain for shareholders what the partners see Sound brings to the solar opportunity today? Sound are not experts in this field, and I'm just curious about what we bring to the table. To some extent, the hydrogen opportunity, please, too. Thank you, Ashley, for that. Maybe I can start that, and then Roy or John can chip in. We've been in Morocco quite some years now. We have very strong shareholders. 25% of our shareholding approximately is the Oil and Gas Investment Fund of Morocco, which is in itself an SPV that is owned by Attijah Alpha Bank, pension funds, etc. So we've been in country a long time. We're sort of getting to be the poster boy of British investments into Morocco, and a success story. Britain and Morocco have recently announced collaboration and support for each other, and we've finally recognised the southern states in Morocco. So that's excellent news about the cooperation between the UK and Morocco. And so having British companies invest in Morocco is well liked, and having companies with an international flavour to them is also well liked. But we have strong relationships. On the solar front, Gaia Energy are over Africa, but they're a private company. Multiple strands to their instruments, whatever, without mixing metaphors, strings to their bows, but on renewable energy. And I think what they were looking for us is to give them some support in Morocco, as they've been mostly working in Africa, even though they're Moroccan. It's a great opportunity for us, I think, and maybe I can ask Roy just to the liberalisation of the medium voltage, and maybe give an idea why we're not sort of trying to do a Me Too rooftop solar strategy, and why we're not doing the gigawatts of power that cost billions of dollars for green energy. So can you add a little bit about why we like the solar opportunity?
Yeah, sure. We're talking about 10 or so sites of probably 20 megawatts. So if you've got a solar panel on your roof, that's a lot more than on your roof, but it's not utility scale. It's another form of energy, but you have to think of a very different risk-reward regime from oil and gas. The risk is really significantly lower. You get lower rates of return than one might expect on a highly successful oil and gas project. So these are low-risk sites in a company which is liberalizing its medium voltage grid. So that's the grid just before it comes into your house. We've chosen 20 sites, 10 or so sites around the population centers. Why are we not in the desert where the sun shines? Because no one needs electricity in the desert. So it's a well thought out plan to take advantage of this liberalized grid. Add to that, we can bid for, be awarded the grid capacity, but not use it, and it becomes tradable. So we don't have to put solar panels, and it's technologically it's very simple. It's the solar panels you see in, if you live in Essex, which he does, the big layer 50 megawatt plants. One of those conventional solar panels, very 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 simple at that. Photovoltaic. So we like it. Some of us have been involved in that before, not on this scale, but it gives the customers to whom we sell electricity the green credentials. It's a profitable venture, and it's low risk, and it's another form of energy. We also bring, in addition to our contacts in country, with some project execution skills. They like the way we're challenging them on that and getting costs down to the bottom, revenue up, cost down constantly in the planning stage. So I think those are the things that we bring to it, and those things that it brings into. And if we start tomorrow, there's cash flow in 6 to 9 months. It's not like a oil and gas cycle of get the license, plan it, drill it, appraise it, develop it. It's a much quicker turnaround.
Thanks, Roy. Just a second there. I would also add that why we also like these is very much like our gas sales agreements, where it's 10 years of flat revenue, constant and not declining, like you'd have exactly the same in solar. We'll have long-term power purchase agreements. Yes, sorry.
Well, I was just going to ask, what our financial commitment is to Gaia on this, because I observed so much.
Sean, sorry, I'm getting a bit old. My hearing's going. Sorry.
No, I just wanted to ask what our financial commitment to Gaia is.
Yeah.
Our reserves to market.
So at the moment, we're under an exclusivity with Gaia, and we're finalising all those agreements at the moment. The idea of the joint venture company that we've put together is that joint venture company will be getting some debt funding in to run it. So because, as Roy said, you get cash flow within 6 to 9 months of each project you put in, you recycle that money. So it's true to say that there will be a small financial commitment from our side at the closure of the transaction, but it's de minimis relative to what we're going to be doing. And it's because we recognise the work that Gaia have done in the last 3-4 months. And we've been essentially, in oil and gas terms, it's called farming into a project. You come in and join something that's already up and running. John, can I ask you a little bit of why GTEC like us?
Yeah, sure. I think first of all, I'd just like to step back a little bit, and hopefully, shareholders will see that what we're doing here is passing the operatorship across to management of the gas development. The gas development is always going to be our sort of primary business at the moment. But it's always been part of our strategy that we've communicated before. We've diversified the portfolio into some of these renewable areas, and we're doing that gradually. And passing that operation on back in December has allowed us to, the team here to have a bit broader bandwidth, if you will, to be able to deliver these. And we've delivered these 2 projects, and there's more to come, isn't there, Graham? As we move forward. Now, for the hydrogen itself, what do we bring to the table? Well, I think it's it's a melding of 2 companies with quite sort of separate skill sets. So GTEC traditionally is a gravity-magnetic based company with a subsurface consultancy on that basis. What they would like to do is start adding some assets to their business and growing in that direction before. So that's a new step for them. What we bring to that space, and another piece that they have is obviously they have a lot of technical skill and knowledge of both hydrogen and helium in the subsurface. Okay, on that side, they're right on top of that science on where it is as it's emerging in this present day. What we bring to that space is, as an oil and gas company, there are synergies in the geology and some of the workflows and processes there. But importantly, we are been a holder of assets, we've operated assets, we can deliver operations on the ground, and we have a strong network in Morocco itself. So that's what we bring to the piece. So that joint venture together with 2 extremely complementary companies, outfits, bringing in those two skills. So we're definitely much stronger, together. And I've been really enjoying the collaboration with the team there. It's been great. So I'd say, it's a perfect marriage.
Oh yeah. Well, I would say, just to add to John's, is the relationship we've had with ONIM, who is the regulator, or is the what's the right administrator of the regulator. That's something that GTEC doesn't have. So John knows them all in ONIM. So that's also why it's helpful. Sorry, sir. Yeah, Sean, can you check the microphone works? Because that's good.
Yes, thank you very much. Yes, I've been a long-term shareholder, and every year it's very bad news that you've been producing, but maybe this time you have got some better news. But is it only the one well that's producing the gas? What about the city Mokhtar? How far away is that from production, if at all?
Yeah. All right. No, 2 wells are able to produce, and both wells have been tested and flown. You only saw the video of one. We weren't able to show you the other one, but we have it. And John, do you want to answer? City Mokhtar is nowhere near Tendrara.
Yeah, let me just be very clear. So those 2 wells, okay, the disc has been burst on the completions there. They are flowing gas. You also would have seen on that video as well, which is quite important to point out that, you know, when you see a gas flare, sometimes you see a lot of soot or, you know, no, it's clean gas, dry gas, no water, no solids coming up through there as well. So, you know, the completions hold everything. So that was a really successful result. Changed out the tubing. They are ready to be plugged back for long-term production. So that's good news. It's not one well, it's those 2 wells that they're ready to go. Now for Sidi Mukhtar, to move over there, as you know, Sidi Mukhtar's in, you know, so the exploration phase. It's early, much earlier in the cycle of exploration phase there. So we're still looking to farm that out. I'm still engaged, you know, in various parties to bring the farm in to fund that seismic survey that we need to do on that license. So again, you know, watch this space. It's all about the moment we've got this, you know, more bandwidth, you know, to focus more on getting these things over the line. You've seen, you know, 2 deals that we brought out this morning. There's more to come as we move forward. Okay, as we grow this business.
Sidi Mukhtar is in the west, isn't it?
It is, yes, right on the Atlantic coast.
Have you got any evidence there is gas in that area?
Oh, absolutely, yes.
Okay.
So the Sidi Mukhtar license itself, they surround the Mascala gas field. And that gas field is, you know, it's a small gas field. It's operated by ONIM. It's been developed since the 90s. But that gas field flows gas from the pre-salt, the subsalt reservoir, which is the Taghi reservoir, you know, to the surface. So it's proven that play in that area. So that play we know works. We've got gas charge. There's a gas accumulation that we've seen there. Okay, now importantly, that area has some 60 exploration wells drilled. So I know, Christian, you mentioned that, you know, there's companies over the last 100 years been looking at this area, but they're very, very few wells. I can count them on, you know, one hand of the finger that, you know, drilled down into that pre-salt section. So it's very, very, you know, it's underexplored, that area. Many companies have avoided, not gone down there. It's overpressured, which is a good thing, because it means that salt is, you know, sealing, you know, the petroleum system beneath there. And then what we've noticed is that on the existing vintage seismic that we collected, which was collected back in the 70s and 80s, so it's very old, quite poor quality imaging. It's because of the historical nature of the seismic. So, you know, we need some new seismic. What we have seen is some large fault blocks, which are simpler structures than Mascala gas field, which is quite complicated, compartmentalized. So large fault blocks. We've actually much thicker reservoir that we see, you know, across those than we do at Mascala itself. So it's an interesting opportunity. So, you know, I'm pushing that and, you know, trying to attract, you know, someone in to carry that survey for us. So yeah. So again, keep watching this.
Do people live in that area?
They do. Mostly it's farmland. I think there's some people in the room that may have visited that area, but I would say it's you know, it's not generally populated. But that area there, as I've mentioned, there's 60 wells been drilled over the years. They have seen seismic surveys before, and actually we can conduct this survey with, you know, very little disturbance to the communities that live there. But also, you know, more importantly, we, you know, for these types of surveys in Morocco, we are welcomed by the local community because we provide work and jobs for that period that survey's going, you know, ahead. So, for example, when we undertook the seismic campaign in Tendrara and Anoual, so there we employed, you know, the crew was in the order of 130 to 135 crew at any one time on that survey. So quite a lot of people, 110 to 120 are employed from the local community to lay out the sensors, to lay out the cables, for cooking, you know, life support, driving, and also driving the vibro-sized trucks as well. So some quite technical roles as well. So we provide a lot of employment in there as well for that period that we're active.
Whereabouts is the hydrogen site? Is that near there, or is it near to the other site?
So I would love to, you know, obviously I cannot disclose for the interest of, you know, the company and the shareholders and our partners, you know, I simply can't comment on where that is. It's quite a competitive environment. There are already other companies working in the hydrogen space. There are other companies that have already entered with memorandum of understanding with ONIM for hydrogen exploration in Morocco. It's publicly known. I won't name them, but you can look them up. So there are companies working there. So I'm not going to say anything about the locations of where they are, because we would be giving away our competitive advantage.
That was part of the reason of working with GTEC, because of the techniques and the database they've got. It's quite unique, and so we've been able to do some studies which we hope, have something quite specific that nobody else knows. But we'll see.
Yeah, they have a unique proprietary database.
It's probably many years ahead because it's not a viable proposition, hydrogen at the moment. So it would have to wait until.
Let's find it first, but it can be viable. Don't worry, it can be viable.
Yes.
Yeah.
Finally, whereabouts are those electrical distribution areas? Are they near a city, or are they still in?
Yeah, these are substations. They're all the ones we've chosen are near main conurbations, really. More, so these all exist, right? And what we're looking at is the land around them to put the solar panels, so that we can tie into the substations. So yeah, they're already existing. This was all nationalised up until 2023, right? So and it's federal and regional. So you've got to have regional relationships as well as federal relationships. Can I do a couple more questions and then, Sean,
good questions.
if you can? But thank you for that. We'll take some more in a second. I've got a question here, which is actually quite an interesting one. Are Graham's and Mohammed's jobs full time? I am currently executive chairman. That means I'm chairman of the board, chairman of that group of work, but I'm also the CEO. So I've got two jobs, and I can tell you it's full time. Okay. The other one is Mohammed's job full time. Mohammed doesn't work for us anymore. Mohammed is now with Manor Energy, and so he's full time with Manor Energy. What we have got is two new part-time, and then I'm sure they're smiling at me already because the part-time seems to be 7 days a week for them. But Andy Mataru, who's an engineer by background, but has also been in corporate investment financing, and on the research side and brokering side, and is a personal high net worth investor in startup listed companies. And we got Roy Kelly here, technical director, and who's former partner at, well, he probably still is a partner at Keragen Capital, and also ran a couple of very quite well-known petroleum consultancies. So we're very lucky to have attracted two excellent people to join our team. Admittedly, they think they're part-time, but we're working them 5 days a week. So thanks for that question. The next question from Mike is, I'm not quite sure I understand it. The gas holder, has it passed all the testing necessary to prove there are no leaks in the structure? And if so, long, how does it take to bring the tank ready to receive the LNG? I mean, Sean, that's...
Yeah, the LNG tank hasn't been hydro tested yet. That's planned for this when the guys come back from Leeds, or within the next couple of weeks.
So the commissioning of individual bits of the equipment, whether it's the pumps or it's the tank or the amine unit or whatever, they're all starting to come through in sort of August, and then it'll all be connected up together to flow them all together. All right. So that's it. I think. Would there be any other questions from the floor? Our friend here.
Thank you. Once it's commissioned, the LNG plant, and there will be a period of sort of customers coming in, the income coming in. How long before there'll be a set income every month, I guess, right? Would that income be within the next, by December, enough to keep the company like fluid? The income being.
Are you talking about the cash flow from the so revenue? Yeah, we're under a take or pay contract. Okay, so a 10-year take or pay contract, and whether it's taken or it's paid for, it comes in every month, right? But there is a period, and there's also some things in the gas sales contract with make-up volume. So if they don't take it, we have to supply more than they'll pay for. But there's a flat 10-year take or pay contract. So yeah, it's consistent revenue. Once we've ticked all the boxes, everything's working and everything's flowing.
With the contract and the price being set, I don't know if you can give a figure of what it could be. on average?
No, I think we've disclosed the gas sales agreement, what the minimum and the maximum are under the micro LNG project you're talking about.
Yes, it's, so not many people know that.
Yeah, I mean we're I think it goes up to, I can't remember the exact number, $8 something. Dan might
No,
even know. Okay, so
I'm talking in terms of your daily supply.
Yeah.
And a monthly supply.
Yeah.
That equates to a figure.
Yeah.
What could that figure be? Minimum, maximum.
well, net to us, and on a yearly basis, it's
On
6
an annual
million.
basis, the revenue to us, once the phase one gets running, is about €6 million per year of revenue. Okay. And out of that revenue, there'll be some G&A costs at the project level to be
Operating costs, yeah.
operating costs to come out of it. But top line, you're looking at 10 years of $6 million per year.
Is that shared with management?
No, that's net to us.
That's to our 20%.
That's our 20%. Yeah. Don't forget the real.
I understand that.
The real increase or the real revenues of this project kicking in phase two. Okay. Once we start to scale up and get the production into the pipe gas, there's a step change in volume, and that's just on the contracted gas. Then there's some uncontracted gas, which later on could be contracted at an even higher gas price. But that stage, that's when the revenues will undergo a step change again from $6 million, but up to a much greater amount.
The way I look is that immediate news from when we have income coming in as an investor. The income coming in, that for once there's money coming into the company for all the work done. And then, yes, I understand the step change with phase two. But initially, there's money coming in at last.
Yes.
Yes.
And that's within the year.
Yeah. I mean,
so within the year we'll have money coming in, which is a positive news. Second question, sir. I keep hearing locally.
Can you hold it a bit more like that?
Locally.
That's it. Thank you.
Regarding the Casablanca exchange.
Yeah.
And the Casablanca exchange partnering with the LSE. And also keep hearing there'll be company dual listing. Now, is there anything about Sun Energy being dual listed on Casablanca exchange?
Well, okay, Salim. We've looked at. I mean, AIM is not a very exciting market at the moment, as you know. Casablanca in Morocco, they have foreign currency exchange control issues for investors. So Moroccan, if they wanted to invest in Sound, and they don't have an international bank account or whatever, they can't. It's very difficult. So could we dual list on the Casablanca exchange? Yes, we could if it was appropriate for us. And the fact that the LSE and the CSE are, having a relationship, a dual listing in Casablanca is a possibility. Could work. Part of the criteria is you've got revenue. Okay, so until we've got revenue, we've looked into it. There's a growth exchange, and there's a couple of other things that you can do in Casablanca and get exemptions and things. But the far simpler is start showing everybody you've got money coming in regularly, and then you can list on the Casablanca exchange.
Awesome. Is management or in Morocco, Sun Energy East? What is their interest in Sun Energy South?
Nothing.
Nothing. Okay.
Okay, Paul, I think we have answered every question and tired the people out in the room. So if I can pass back to you.
Fantastic. Look, thank you very much indeed. Thanks for covering off all those questions. As you say, of course, any further questions, the company have the ability to review those, and we'll publish responses where appropriate to do so on the Investor Meet Company platform. Graham, just before redirecting investors to provide you the feedback, which is particularly important to you and the team, if I could just ask you for a few closing comments, please.
Well, thank you all for supporting us at the AGM and this investor presentation. The RNS will be out with the poll results very shortly. I'm excited that we have entered into 2 new opportunities more formally, both into Morocco, playing to our strengths, but also partnering with very credible counterparties. That's on top of our prime business, which is to get the Tendrara gas flowing. From what we've seen in the preparation for our meeting with Managem next Monday, We see that they are fully focused on delivering gas in Q4 this year. And so, first production Q4 this year. And we'll be pushing very hard to get the exploration moving and to get phase 2 going. So thank you for your time. Thank you for your patience with us. And we'll see you again in the not too distant future.
Thank you very much indeed to the board for updating attendees today. Please ask attendees not to close the session. You should now be automatically redirected to provide your feedback in order the team can better understand your views and expectations. It's only take a few moments to complete and is greatly valued by the company. On behalf of the board of Sound Energy PLC, we'd like to thank you for attending today's annual general meeting and presentation. Good afternoon to you all.